Hello again from Sprott Money, news at sprottmoney.com. It is time for your February Ask the Expert segment. Boy, there's a lot going on in the gold market here in February. We need all the experts we can get. I'm your host, Craig Hemke, and joining me this month is my good friend, money manager and analyst Dave Kranzler. You can find Dave's great work at Investment Research Dynamics. He writes a couple of different newsletters and has been following gold even longer than I have. And it's great to always get his opinion. Dave, thank you so much for taking some time to join us.
Craig, thanks for having me on again. I will say, though, you're making a big assumption calling me an expert.
Oh, come on now. Don't sell yourself short, Judge. You're a tremendous slouch.
Caddyshack.
Yeah, right. And again, before we get started, Sprott Money is your sponsor of all this. So there's going to be more stuff coming this month, in March, April. Subscribe, like, whatever channel you're watching first and foremost, so you don't miss anything that we put out. But then remember, Sprott Money is a bullion dealer and a bullion storage company. So you want to keep them in mind anytime you're in the market. Right now, they got a pretty cool promotion going on called the Our Choice Gold and Silver Box. If you go to sprottmoney.com, check that out. You click the Our Choice product, and Sprott Money will handpick the item for you, ensuring you get the best price from whatever is available that day. Each piece will be a minimum 99.9% pure gold or silver, giving you the best value for your dollar. And of course, free shipping and insurance on anything over $500 too. So visit Sprott Money's website and you can explore all your options today. And again, always keep them in mind and give them a call too at 888-861-0775. All right, said expert Mr. Kranzler. Let's do this. What folks don't know is Dave and I have been friends for a long time. A lot of us in the gold community know each other. And you and I and Chris Palagata started emailing each other just in our own little text stream back in about the latter part of January, so 3-4 weeks ago. And we all kind of were sniffing out a rat like we were being gaslit, I think, at about the same time. The spread blowout between spot price and the futures price has gotten wide, meaning no one has the confidence to arbitrage it. You're hearing these stories about all this massive flows of metal into the U.S. and into the COMEX, delivery delays in London, all this kind of stuff. Dave, let's start with what seems like gaslighting. Do you attribute all of this current situation to the threat of tariffs from President Trump?
If that's the case, where are these said tariffs? Right?
Right.
I mean, it's not even in Trump. What, he deferred the tariffs he slapped on Mexico and Canada for at least a month.
Right.
And it's not even clear exactly what was being tariffed.
Mm-hmm.
So, and I guess he's put tariffs on steel and aluminum, yeah, which is bad for companies like home builders and automakers. But the thing of it is, I'm sure Besant or however you pronounce the Secretary of the Treasurer's name, I'm sure he would take him aside and say, you can't put a tariff on gold. It's a tier 1 bank asset, reserve asset. And you can't put a tariff on silver because that's a strategic metal, even though it's not officially declared a strategic metal. I mean, the military or, defense companies use a lot of silver in the production of missiles and other, all the other military equipment. So I just don't see a tariff on gold and silver being likely, not even possible. So
have they mentioned the metals ever, gold and silver ever specifically?
No.
So all right, so Dave.
And here's the other thing. I mean, if you put a 20% tariff or 25% tariff on gold and silver, I mean, people are still going to buy it. It's still going to come into the country. I mean, look how much more everyone's paying for gold and silver now than they were a couple years ago.
Good point. So, all right, so what is going on? Why is it just unsophisticated financial media that never really pays attention to gold anyway, and so they just glam on to the official line of tariffs and everybody just starts spouting it? Or are they gaslighting us so that to not cause a delivery. What do you think's going on?
Well, I mean, it's unsophisticated financial media. I mean, the media is just a hand puppet for the elitists anyway, right?
Yeah.
So, they're just parroting the narrative, that the script that's put in front of them and that they're told to report. So, and none of them know how to. I mean, we can't even know for sure ourselves, right? What's really going on, because the powers that be intentionally keep the flows of physical gold as opaque as possible, intentionally. And I mean, just look at what China's reporting as their central bank reserves, plus versus what we know they really probably are. So you can't know the truth for sure unless everything gets exposed wide open for everyone to see. But you can follow footprints in the snow.
Yep.
And in my opinion, what's going on is a massive shortage of good delivery 400-ounce physical bars in London. And the indication of that was the Mickey Mouse with the Bank of England rolling out their stooges, telling us, oh yeah, well, there's a lot of 400-ounce bars being shipped to Switzerland, refined into 100-ounce bars, and then shipped over to the United States ahead of the tariff. That whole Mickey Mouse. But you've had, ever since the U.S. seized Russia's Western central bank assets, you've had a large scale movement whereby all these central banks that are buying gold in the East they're asking for delivery of it, not being held, not delivery into London vaults, but repatriated, right? And
Mm-hmm.
so I just looked at that and I'm like, it's inevitable that they're going to wear down the supply of available good to deliver bars in London. I mean, even India, which had been keeping its central bank gold in London, has started repatriating it. They've already repatriated a couple hundred tons. That's a lot of, even Poland. I mean, Poland, a lapdog of the U.S. essentially,
Yep.
and they're repatriating their gold. So, I think that's kind of worn down the available supply. And now you've got, what you're left with is this web of paper claims on bars in London and bars in New York. And, more than likely, there's multiple paper claims per bar.
And which presents an issue, because the system has always been this kind of fractional reserve system with just-in-time delivery at that derivative price. Dave, I think you're right. Those are two dots we can connect. The first weekend of March in 2022, when the U.S. froze Russia's foreign currency reserves and kicked them out of SWIFT, and it was in 2022 that central bank gold demand surged over 1,000 metric tons, and it has stayed there annually now 3 years in a row. So I guess, Dave, the LBMA, you mentioned their little webinar they put on, the Bank of England's news conference after their most recent meeting. They were all sitting there trying to tell everyone, oh, we got all kinds of gold. We got the Bank of England gold, we got the ETF gold, none of which you would think is for sale. Could they be out? Are they out of gold freely able to deliver? Is that the source of these delays as reported by the Financial Times?
Again, I mean, we can only, try to put together a picture based on the information that's available to us, right, to look
Mm-hmm.
at. And it's not a lot. But in my opinion, I think what's happened is, over the last several years, I mean, central banks lease out their gold bars to bullion banks to when the bullion banks need those bars for liquidity to make deliveries into Asia and India. And let's not forget that outside of the central bank buying, the Indian public consumes about 800 tons of gold a year. So I think the Bank of England kind of got caught where they've leased out gold bars that weren't specifically theirs to lease out,
Mm-hmm.
thinking that no one ever asked for the actual physical delivery of these bars, so we'll just assure them that they're in our vault. And I think they're having trouble getting, sourcing bars on the open market. So my guess is they have to wait until the gold is refined into 400-ounce bars that then get delivered to the Bank of England, and then that they can turn around and give to the entities that are asking for delivery of those bars. That's what I think is really going on. And interestingly, I mean, I'm sure you follow the work that Robert Lamborn does for GATA.
Yeah.
And he tracks the monthly amount of gold swaps from the BIS. The amount of gold swaps from the BIS has taken a huge nosedive. From it was up to close to I want to say 500 tons at one point within the last year, and it's well under 100 now. And what I think is going on, so the BIS would swap out their 400-ounce bars for whatever bars the central banks can put up as collateral, so that the bullion banks, so that then they can turn around and lend it to the bullion banks for delivery purposes. And so if the BIS is pulling back that drastically on the gold swaps, either they're out of gold bars also to use for swaps, or they're just like, whoa, let's be careful on how much of this of these 400-ounce bars we swap out, because we might not get them back.
Right. Dave, let's transition then back to the U.S., where, again, because of these alleged tariffs, that's what we're told. All of a sudden, we're having these record flows of gold into the U.S., whether it's from Switzerland, whether it's even from Singapore. All of this gold is flowing to the U.S. Record, and we always have to do this, deliveries on COMEX that here in the delivery month of February might reach all the way up to 240 or 250 metric tons. Which is blow away all the records of whatever has happened in a delivery month before. So all this gold's flowing into the U.S., again, allegedly ahead of tariffs to shore up the COMEX derivative market. That's what they're telling us. And then you're getting into this now. Wait a second. There's this movement to find out how much gold is actually in Fort Knox and in what kind of shape it's in. There's discussions on financial TV every day about whether the price of gold that the U.S. carries on its balance sheet should be marked to market. What do you make of all this? Are all these things connected, or are they, just independent happenings?
That's a good question. I don't know. What I find interesting is, if all these entities in the U.S. want gold bars, why isn't any of it leaving the COMEX?
Right. Yeah. Because you get those reports every day.
That's right. And if the Fed is going to assure us that the gold that it's supposed to be safekeeping on behalf of the United States Treasury, on behalf of the U.S. taxpayers, why won't they allow an independent third-party audit of Fort Knox, the Denver Mint, and the deep storage gold that's at West Point? Because a lot of people don't realize this. Almost half the gold that was in Fort Knox has been moved to various locations.
Yes.
Most notably the Denver Mint and West Point. And that was what triggered the Germans' repatriation of their gold. I don't know if you remember, they originally asked for over 600 tons, because what happened was there was a movement over there at the time where they were getting pressure from the public to repatriate their gold.
About 10 years ago.
Yeah, and so they requested to send a delegation over to inspect the gold in the vaults that the Fed was holding, right? That was the 1,500 tons that they moved over here after they, got their ass beat by Russia in World War II, and they were worried about getting invaded by Russia. And of course, when countries invade another country, one of the first things they do is go take the gold.
Right.
So, and they were denied. The Fed said, well, we can let you into one vault. And then the conversation, and then that's what triggered the repatriation request. And the Fed didn't want to send them, the amount they requested. They settled on 300 tons over 7 years. And I think it was eventually returned in 3 or 4 years, something like that. But it also wasn't the original bars that were sent over.
It wasn't the original bars. It was like brand new bars and stuff.
Well, also coin melt. It was, not bars that aren't good to deliver. So, that's another sign that you look at and you say, you start to question whether the gold that's supposed to be in these vaults that's owned by the Treasury is actually even there. So, and again, it's one of those things we can never know the truth
Right.
unless they open up the vaults and allow an independent third party audit that is, visibly available to the public.
What do you think, Dave? I mean, even if the full 8,133 metric tons are there, and notwithstanding provenance and who actually owns it and that kind of stuff, so much of that is coin melt bars from the 30s at 90% purity that it's already overestimated by 5 or 10%, because if you were to all refine it again, you wouldn't even have 8,100 metric tons. You maybe have 7,500 metric tons.
That's right.
So what what do you think is, I mean, if it came down to brass tacks, I mean, I'm sure there's gold in Fort Knox. You can go there and take some pictures of it, but how much really, I mean, if they actually did an audit, what would you think they'd find?
I have no idea. What we do
Right.
know
I guess
is
good
that
answer.
a lot of the Fed's gold was was um was used to honor the Bretton Woods Agreement that foreign
Mhm.
buyers of treasuries could redeem their treasury certificates for gold at the
Mhm.
Fed, right? And Charles de
Right.
Gaulle did the math, and he's like, they've issued more treasuries to foreigners than they have gold, and he
I love to
started
see
doing
gold.
that. And then there were rumors that the Swiss were going to also do the same thing, and that's what really triggered the closure of the gold window.
Mhm.
So, um, I honestly, I mean, it's impossible to know, what's there, how much, and in what form.
Let me ask you one last question. Um, as we record this here on the 20th, we were really picking up a lot of momentum earlier this week. Last evening, what day of the week is this now? Wednesday. President Trump was on Air Force One. He goes, "Yeah, we're going to go in, we're going to audit the gold. And if we find out, we're missing any, there's going to be hell to pay," something like that. And gold's rallying. And then the Secretary of the Treasury shows up on Bloomberg this morning and he says, "Oh, yeah, when I was talking about monetizing assets, I wasn't talking about gold. We're talking about other stuff. Oh, and furthermore, we're not going to revalue the gold. We're just going to keep it at $42 on the balance sheet." Um, let's set that aside and figure that who knows who he's speaking for. A lot of what I've always heard, Dave, is, well, you can't, man, if they say gold's worth $3,000 an ounce on the books or $10,000 an ounce on the books, that would be so inflationary. They can't possibly do that. Would it be? We created $5 trillion from thin air and fed it out to the public after COVID, and sure, CPI spiked to 9%. But this would be the same as that. I mean, would it? Long question. Would it really be that horrible of a thing if the U.S. government suddenly marked that gold to market or a couple multiples higher?
Well, I mean, what would be the purpose of doing it? Uh, you know, they at this point they can still issue treasuries and
Yeah.
sell it to foreigners who are a major portion of the entities that are financing our deficit. I don't, if they tried to do a, a gold-backed treasury bond, I don't think countries like China would believe it, and they wouldn't buy that bond until they got to see the gold itself and verify that
Yeah.
it's there.
Yeah.
And
Yeah.
so I think, would it be? Well, I don't understand why it would be inflationary unless they were able to issue a lot more treasury debt against it, because the issuance of treasury debt and government deficit spending in and of itself is inflationary. But where inflation comes from, the primary source, is when you devalue the currency by printing it, at a rate that's in excess of the wealth output. And that's what's been going on for over the last year. I mean, most people aren't paying attention to it, but M2 is well, as of the last report, which was, I believe, the end of December, because there's a 2-month lag in when they report it. M2 was near an all-time high, and my bet is at this point it is at an all-time high. And that's where inflation comes from, not from, the Treasury revaluing the assets out of its balance
Yeah.
sheet.
Yeah. Well, I was all hot to trot a couple of days ago thinking all these pieces connected, that they were going to revalue, they were going to audit what they had, they were going to revalue the gold, and then issue the gold back treasuries at 50 years to fund the sovereign wealth fund. I thought I had it all figured out, Dave. And then I wake up this morning and the actual people that have the power to do this just shot me down overnight. We'll
Well,
see.
my bet is Besant or Besant, whatever. He probably knows. He might know the truth about what's really going on. I don't know. Um, and we know Trump likes to blow a lot of smoke,
Yeah.
and not live up to a lot of it. So I never put much stock in the idea that they would actually audit Fort Knox. Great. Are you going to believe Trump if he goes to Fort Knox and comes out and says, the gold's fine, it's there? I mean,
Right.
Steve Mnuchin, when he was Trump's Treasury Secretary in his first term, he did that, remember?
Yeah.
He visited Fort Knox, walked out and made a big media production. The gold's there, it's fine. I
Yeah.
mean, in the court of law, there's rules of evidence. And someone's word making an assertion like that without actual proof
Objection.
it's hearsay. Hearsay
Objection.
evidence.
Hearsay.
Hearsay evidence is not allowed in court except under very, very narrow circumstances. And so that's
That's
all
right.
this is right now. I
Yeah.
mean, this is one of my favorite examples. So the COMEX, after the CME bought the COMEX, and I don't look at them all the time now. I have been lately because it's getting interesting again. But I used to look at the vault reports every day back,
Mhm.
20 years ago. And after the CME bought the COMEX, I believe it was maybe 2008. Not too long after that, all of a sudden a disclaimer started appearing every day on the warehouse stock report. The information in this report is taken from sources believed to be reliable. Now, those are the banks that operate the COMEX. However, the Commodity Exchange Inc. disclaims all liability whatsoever with regard to its accuracy or completeness.
Yeah, they do.
This report is produced for information purposes only. So that did not exist when the CME didn't own the COMEX, and it exists now, and it's been on there every day since they put it on there.
Yep. Yep.
So, I think the CME also knows what's really going on and knows the
Right.
truth.
Right.
And
You
a
know,
disclaimer like that tells me that report doesn't show, it is showing us something that's not verifiable or true.
at the end of the day, get some gold. If you already have some, maybe get some more and get it in your own two hands or store it with a trusted company, so you can get it at some point in the future. Um, the lesson, I mean, it's all laying right in front of you. I mean, we may be scrambling trying to connect dots, but the dots are there no matter how you connect them. And we will see where this all takes us. Dave, one last thing as we wrap up. I know a lot of folks follow the mining shares, and you do a great job as a mining share analyst. And your primary
Thank
job,
you.
mining stock journal. Tell everybody where they can find out a little bit more about that.
Sure. So, my blog, investmentresearchdynamics.com, has a link at the top. You just click on that, and it tells you all the details. I release a new issue every other Thursday. In fact, this afternoon is going to be the latest new issue with some exciting ideas in there and some exciting updates on the companies I cover and recommend. I also invest with my own money or the small fund that I manage, in probably 70 to 80% of the ideas that I cover and recommend. There's not a lot of newsletter writers that put their money where their mouth is. So,
That's for sure.
in fact, I just added one of those positions earlier today, as you and I were discussing before we started recording. So, and
Well,
I also have a Substack now called, Mining Stock Journal is the name of the Substack.
is
So,
that a free Substack, Dave? Is that something that, or is that
it's
part of the
it's
subscription?
well, it's got a free version and then a paid
Okay.
version. And I post content from my newsletter on there. Occasionally a specific content about a specific stock. And then if you do the paid subscription to the Substack, it includes a subscription to the Mining Stock Journal.
Perfect. And that Substack, I know investmentresearchdynamics.com, but the Substack under that name or your
just
name?
Google Mining Stock Journal Substack. And it's
even an old fool like me could find that, Dave. I think so. No excuse for anybody else to not find it. Dave, thank you. And again, I just tell everybody on my site, I mean, if you don't know how to measure, grams per ton over length and all that kind of stuff, I find people that do, and Dave does. So I always
appreciate that, Craig.
Drive people to at least check your service and see if it's the right thing for them. Dave, thank you for your time. It's always so insightful to visit with you, and especially at the way this year's begun, with all these different cross currents and dots. It's been fun to pick your brain a little bit. So thank you.
Thanks for having me on again, Craig. I will say it's, over the last 3 or 4 weeks, this year it's gotten extremely interesting in the precious metal sector.
Can't imagine it cooling off anytime soon either. So
no.
You gave me a great segue to remind everybody to like or favorite either sproutmoney.com or whatever channel you get this content. There's more still coming in February. There'll be more in March and all through the year. So you don't want to miss any of it. Stay on top of things. Sproutmoney.com. Thank you, Dave. And thanks everybody for watching. And again, keep an eye on this channel. The month will continue. The headlines will continue to come at us, and we'll have more information for you as we roll deeper into the month of February. Thanks for watching, everybody.